We're actually growing our client base already at over 30% a year for our high net worth clients. That's been growing. Last year it was 26%. And we've got aspirations, certainly for the next few years, that we'll see continued double-digit growth and hopefully 30+%.
But with the economic slowdown in China, do you see any changes in appetite for assets? Because people might have less investable wealth, or they just want to invest something safer.
Yeah, I think actually we see that with our Chinese investors, that they are looking for safer opportunities. There used to be this desire to try and gain return. Now I think it's more balanced, and they're looking at risk. We've got our clients are also keen on principal protected products. And they're looking at kind of the longer term investment opportunities and how to build wealth over time as opposed to trying to get a quick gain.
How are you going to combine onshore and offshore opportunities for your clients in the current global economic landscape?
Well, that really depends on the risk profile of our clients. If our clients want to continue investing with a balance of international investments, that we can provide. But I do think we're going to see more opportunities for growth of investment products onshore. Deregulation, focus on building local asset management companies will over time create new investment opportunities onshore. And that's important. As wealth grows onshore, not only is consumption important for growth of the economy, but people also need to be thinking about their futures and investing in the future.
And how are the current monetary cycle across the globe affecting your clients' appetite?
Well, there's I would say markets are always a little uncertain. If you've got a long-term view, then not so much. If you've got a short-term view, then maybe a little bit more cautious at this point in time. Obviously, some events around tariffs and these types of things cause uncertainty in markets. So short term, I think we're seeing people being a little bit more conservative, but over the longer term, people are still focused on their long-term wealth aims.
Is there any specific shifts from one asset to another?
Well, on the equity side, if we look, we've got about 200 funds that we make available to our clients. Our top 10 funds have grown between 20 to 30% this year. The top funds that people are interested in are more involving AI, tech stocks, etc. I think probably no surprise. But I do see also, I think that there's a tendency to move a little bit more towards fixed income as there's uncertainty in the equity markets, but a balanced portfolio across our client base.
And in terms of geography, is there any preference among clients?
Yeah, I think outside of the China market, we see a preference for the US market, and maybe that's also our US heritage that draws people to us to think about that. But we've also got a broad selection of investment opportunities across Asia and in Europe that also gain traction. But I think probably US-based are more popular with our clients outside of China.